Good evening and welcome to my midweek recap here for the S&P 500 and plan ahead for the remainder of the week, maybe next week. Now, this week has been so choppy thus far, not really too much to do. I've taken a few positions off, limited some risks, had a couple of new trades. First of all, I was holding these 22 June 278 calls over the weekend on the gap up on Monday. Took half off here at 179, quarter off once it fell below VWAP, and had my stop just below basically this chop area. Once price action rolled over and broke below a red candle, I actually closed out that position there at 205. Uh, Almost got to the highs of that move. Had a sell order in at 250 for the remainder of them, but didn't quite make it all the way up there. So nothing really to complain about. It's still a good trade. On Tuesday, end of the day, I got in some 280 calls for the end of the week at 43 cents. Gap up here on the open didn't look like it was going to do too much, so I took half off there at 48, quarter off at 53 once it broke above highs and looked like there's some sellers on the tape, and broke below VWAP, got me out at 45. So another profitable trade there, nothing huge, but profit is profit, and they do add up. End of the day today, same as Apple, looked like some support was coming in on the tape, and a little bit of a faster time frame is more evident what was going on. FOMC meeting notes came out here. Sell off looked like it was going to be one of those situations where the first reaction is going to be the wrong reaction, and it started to climb up. So had a notification in the chat room today. Got into some 22 June 280 calls at 67. Broke above VWAP. Looked like some sellers hitting the tape again. You can see the volume spike and put in an upper wick. So I took half off there at 82. Break below VWAP got me the rest out at 74. So again, not a huge trade, but a couple of wins on the day kept me very green for the week. And here towards the end of the day, I did get into the end of the week 279 calls here at 31. So we'll see what happens on the open tomorrow. I'm also still holding June 2019 325 calls and August 295 calls. So we'll see what happens with those. Over here to my trade plan for tomorrow. First of all, on the daily time frame, it's very nice to see my W pattern has started to play out. It's back up to the highs. Now, the only way to see if it actually does confirm and play out all the way is if it makes it all the way up here to this target about 293 to 295 area. I still think it will, still above a lot of major levels of support. And there's really only one price level above it, and that's the previous all-time high. So anything above 280 will probably have a good possibility of coming up to test this area, just like this range here for a consolidation. Same thing is going to happen up here if it does move up there. Now today was a bearish engulfing day, which means price action today pretty much was wider than all the price action of yesterday and the day before. So it's due for a pullback. There's nothing to worry about there. Price action has left an important level of consolidation here between 274 and 270, so it may come back and retest it. It may only touch the 80 EMA, the 21 EMA, and then continue higher. So I'm not going to be overly bearish on the market. Even though volume does confirm there's participation in the day, still a lot of call activity, a lot of block trades coming in. 277.40 had a lot of block trades a few days ago, so we'll see what happens if price action holds there. Now, what I'm looking at for levels to enter at 8 EMA, I'll look for 278 calls approximately 2 weeks out in the future. Down here at the 21 EMA, I'll look for 275 calls approximately 2 weeks in the future. Way down below here, 270s at the 50 SMA, and even further below the 200 SMA, I will look for 265 calls approximately 2 weeks out in the future. Now, those call positions are likely to change depending on how price action opens up and moves them tomorrow on the open, so I may adjust them up or down, whatever the case may be, for a little bit closer fill to what actual price is. I'm not looking for any breakout trades unless price action breaks above this 280 level. If it consolidates in this 280 to 278 area, which is a $2 range, is perfectly normal for SPY to consolidate in that amount of price movement. If it consolidates for a couple more days and it starts to show some strength and climb higher, I will gladly go ahead and take a breakout type of position. But for now, it just looks like it's going to consolidate. The S&P is known for making these broadening wedge patterns, which is simply an indication of consolidation. It's price discovery, and how they form is not not too complicated. Basically, you'll see a support that's set in, and because it's such a heavily traded instrument, You'll have algos that see all the support buyers at that level. They'll push through it, trigger stops. Breakdown bears will start to get a little bit heavy, push down a little bit harder. They'll start seeing that liquidity as well and reverse back up. So you'll now have a lower low and it pushes up. Same thing up here. You had breakout buyers and sellers whose stops were just above this previous level of 279.40. Algos saw that, pushed up through it, triggered some stops out. You can see how the volume came in on that initial break. Was not enough volume to carry it higher, so it rolled over. Now we have a broadening pattern over the last few days. And how to trade those is basically just look for it when it reclaims a level and it'll start to run back up to the other end of that pattern. So those are going to be my trade plans, a little bit of notes for the future. If you have any questions or comments, please feel free to leave them down below. Have a good evening and good luck.